Good evening, everybody, and welcome to the Hump Day Market Update. I'm Lee Seiler, also known as the Stock Doctor. Today is Wednesday, April 29th, and I'm sure everybody was just peeled to their TVs as the governor of Florida, Ron DeSantis, talked about reopening Florida for business, unless you live in Dade, Broward, and Palm Beach County. So you're still under, I don't know what they're called. They're not calling it quarantine, whatever they're calling it. I'm not sure. So I watched it. And I was a little bit perturbed. Now, I think that he did okay. All that's fine, whatever. But after seeing the numbers and seeing the math, and my good friends over at First Trust always says that math wins. After seeing the math, I wonder. And it was interesting because I was having a conversation with my wife at this point, and I'm thinking I was a little bit perturbed after seeing the math, where we were led as the public or citizens of the state of Florida were led to believe one thing, and again, things have changed a lot, okay, but the numbers were not as bad as we thought they were going to be. Yes, we took precautions, we did certain things, took measures. I got it. But there are people in this state, there are hundreds and thousands, I'll say thousands of people, that are going to be bankrupt, they're out of work, they've either ran through their, best case scenarios, have ran through their savings, but really bad situation for maybe something that didn't have to take such a drastic response. I don't know. I'm not an epidemiologist. I'm not a scientist. I'm a capitalist, and I'm a small business owner that is lucky and fortunate that my business was essential and we kept working the whole time, and I've been in my office every day. So this, aside from going out, skin deep playing or going out to restaurants, my life really hasn't changed that much. But I know friends where their lives have changed, where they were once making a good living and now they're making a zip or a real small fraction. Just don't know. I'm going to leave you guys you can have your own thoughts about that. But it's a little bit disconcerting. But the conversation I had with my wife was, she said, "Well, they did this because that's why we're at these numbers." And then she's probably right. But my point is, our perspective is different. Our lives really haven't changed. If we both lost our jobs and we were broke and couldn't make our mortgage payment and couldn't get food or whatever's going on out there, I think your perspective would be changed. You'd be pissed off. I totally understand, folks, and I'm sorry it happened. I really am. I just don't know. I don't know what the answers are. That's way above my pay grade. Anyway, but tonight we're not going to talk about that, except that restaurants will be open. So those folks, those really great folks that we know, tons of them in the service industry, they'll be back to work on a limited basis, and I'm sure things will change on a daily basis. But I guess if you have an outdoor eating area, you're in a lot better shape than just strictly indoor, because outdoor, you got to have the 6 feet distance. Indoors, 25% capacity. So a lot of these restaurant owners are my friends, and does it help them? I'm not sure 25% capacity will help them, because yes, they may not have to have as many servers, but you still have to have your kitchen staff. You still have takeout going on. I don't know. I hope it does. I want it to work, and we're going to talk about 2 restaurants that I really like, and they're going to be my commercials, and I don't charge for commercials yet. Anyway, but we'll talk about those in a little bit. But let's talk about what's going on in the markets. By the way, the market last week had its first losing week in 3. So that March 23rd low that I was talking about has still stood the test of time thus far. Will it going forward? I still think that the prices of the market are a little ahead of itself. I'm okay with it because I'm rolling with it and we're making money and I'm glad. And we have made some tremendous calls here. And in case you haven't noticed, for some clients that could assume the risk and understood what the energy markets brought into your portfolio, they're up anywhere between 20 and 40%. And that little bit of energy exposure we picked up a few weeks ago. I mean, I'm looking at a fund, and I talked about it the last 2 weeks, I think. I know last week for sure, maybe 2 weeks. A little energy fund. I'm not going to name names until you get to talk to me directly. I can't just blanketly throw names out there. I got to make sure that you can assume the risk and you know the liabilities, potential involved in something like this because it is volatile. But the energy sector has, when I saw that the oil pricing was negative, okay, I'm not a Rhodes Scholar. I'm your basic community college, state university kid. That's it. No private school education for me, all right? I'm a street kid that never had that luxury. But I have common sense. And it tells me that you can't stay negative $37 a barrel forever. So, last week had the first losing week, although we're going to have the best month of April. Shit, we're 29th. So, tomorrow's the last day of April. Barring a major disaster tomorrow, we're going to have the best month we've had since October of 2011. But I want to go over a couple of things. I started talking earlier about the governor and the numbers we were told. I mean, we have 45% beds in hospitals available. We have used a fraction of ventilators we have. I was led to believe that the hospitals are packed. We have no ventilators. People are going to be dying because they don't have the equipment or the resources. Okay, I'm done with that. But I will talk about the press a little bit. Thank you very much. And we have questions already. If you want to email your question or call it in, you'll see the ticker on the bottom. Also, by the way, we have events coming up. We'll talk about that in a little bit, but my next event is May 30th. Guess what? It's a social distancing event. All we're doing, excuse me, Rona, all we're doing is going to pay for your shredding because everybody's been in their garages, in your attics, cleaning out shit. Guess what? You can come to my office. Shred It will be here on Saturday afternoon from 12 to 3 on May 30th. Everybody is invited. I got 3 hours. If I need to make them stay another hour, I'll do it. Okay? That's on me. Shredding event. We'll advertise for it. But let's talk about the media. It's not so much the media. It's okay. This just in. Everything you read on Facebook, not everything, is true. Not sure you knew that. Here's why. There was... And because somebody, and by the way, Facebook reported earnings, they did pretty damn well. I mean, the company did extremely well. They're trading up nicely after hours. And Facebook, and I wrote these things down, based on their option trading, I'm going to tell you, they had a percentage. It was interesting. Facebook had a 61% chance, based on options trading, of beating their estimates. Now, their earnings were flat, in line, but revenues beat, and their users are absolutely incredible. And I'm looking for that story. I'll find it. But their user growth was unbelievable. There is... Jared, I lost that story. Oh, I got it. Okay. Facebook reported earnings, right? Strong, no doubt. But listen to this. Their daily active users, 1.73 billion, with a B, users on Facebook. The analyst estimate was 1.68 billion. Monthly users, okay, people don't live on it. They had 2.68 billion monthly users versus 2.34. But my point I'm trying to make is there are 7.8, slightly less than 7.8 billion people in this world. 34% of the world is logging on to Facebook on a monthly basis. That's unfreaking believable. I mean, unbelievable. Zuckerberg, Jesus, that kid. I mean, that is just unfreaking believable. And quite frankly, I would say the other words well, anyway. So let's discuss what I see on Facebook. there was an article that really hammered Disney. It was a UBS analyst. They're a Swiss bank. And, look, analysts have an opinion. We all have opinions as investment professionals. I happen to be a registered investment advisor. I manage money. One thing about analysts, they usually don't manage money. They create transactions for their firms. They want to create activity because activity brings them profits. Okay, that's not what we do. But there's an analyst from UBS said he didn't believe that Disney will open till 2021. Hey, maybe he will be. Maybe he's part of the Psychic Friends Network. Maybe he is the long-lost son of Miss Cleo. I don't know. But in the same breath, and just under that article, JP Morgan analyst said June 1st. But which one do you think carried weight amongst the Facebookers? Guesses, anyone? Okay, well, yeah. Rumor has it Disney's not going to open until 2021. Again, maybe they won't. Maybe they'll start, I know the plan is they're going to start at 50% capacity, and I hope they do because they employ a lot of people. We need it in Central Florida for sure. Okay? But my point is, don't believe everything you read, especially on Facebook. It's bullshit half the time. All right? Bullshit. So, what I want to do, and we got questions, we're going to get into that, and there's a lot to talk about, but I'm going to try and knock this out in 30 minutes or less. All right? GDP, look, we're in a recession. We said that. I said the recession started the Sunday of Bike Week. I know this because I saw it in front of my very eyes. I saw businesses close down in front of my eyes when I was at Bike Week on Saturday and Sunday, the last day. There was the first estimate for GDP, which is the growth of the economy, gross domestic product. It was negative 4.8%. That's the first kick of the can. They get two more at it. Negative 4.8, and that's only from 1 month out of the quarter. That was a disaster. January, February is kicking ass. March came, chopped your legs out from underneath you. Personal consumption, business investment, and home building took a hit, down 6.6%. But here's what's interesting. Estimates for Q2, we talked about this last week. I believe that we're going to be down 4.5% to 5%. Sure, we're going to be right around there. Q2, I think we're going to be down 20 to 25%. There's an estimate out there, be down 30%. Your economy contract 30% in Q2. It has not seen, by the way, since World War II, the biggest contraction, which was on the heels of the Asian flu. Why does it always start there? It's the wet markets or the labs of Wuhan. I'm just telling you. But that was a 10% contraction. That was the biggest one since World War II. And yet we're going to see a significant contraction. And these numbers don't even sound... I thought these numbers were not bad. But there was of course, service industry got decimated. Service industry fell 10.2% on an annual. They figure out on an annual basis. Listen to this, though. Healthcare, restaurant and bars, expected. Recreation and transportation, all expected. But healthcare seems a little odd. Well, think about it. Healthcare is not just COVID patients. It's elective surgery, and that's just not nose jobs and boob jobs. It's colonoscopies. It's things that you probably had to do but had to get scheduled. It's not just a tummy tuck or lift. So the services, now those elective surgeries are going to come back according to the governor's plan, which is good. We could all use a little bit of work. But the service industry, and healthcare in general, though, dental offices are closed. Eye doctors are closed. So anyway, that's what's going on there. So let's talk. We had some questions. And by the way, earnings, before we do that, I'm going to get into some questions. But earnings have been actually pretty good. And I've been really watching the options markets because it's given me an idea of what to expect. And for example, Amazon will report tomorrow after the close, and there's an 80% chance, based on options trading, an 80% chance that Amazon will beat expected earnings. I'd venture to say, because that's one of those stay-at-home stocks, we're going to talk about those too. Tesla reported earnings tonight. Here's what's interesting. There was only options were not right here. There was only a 25% chance that Tesla would have beat expectations. They did. Stock is trading up 70, 80 bucks after hours. That's significant. Microsoft also beat. 74% chance of beating expectations. Apple reports tomorrow. That's a big number for me. All right, I own a shitload myself and for clients. So it's big. Jerry, it's big. It's gold, Jerry. All right, there's a 29% expectation they beat. But the stock's been acting well. So let's look at that too. But I think what's going to happen is it's the pent-up demand. Yes, you're not going out and buying iPhones right now, but just because of the coronavirus, are you not going to buy an iPhone, or will you buy it next quarter? The one problem is supply chain with 5G, which is supposed to be coming out. So that's interesting. So Facebook, by the way, 61% chance they're going to beat expectations. They did. Before we go any further and take the questions, I want to talk about, I have two of my favorite restaurants. I'm going to talk to you about them both right now. I'm going to do it quick because they're fantastic, and they're friends of mine too. First of all, Fuel Barbecue in Sanford. If you love real old school barbecue, you want to go to Fuel. It's on the corner of Park and 2nd in downtown Sanford. And the team at Fuel has the highest quality smoked meats, along with delicious selections of scratch sides. They're all made from scratch. And my favorite is the smoked mac and cheese. It's fantastic. Their operating hours are noon to 8. However, I don't know, today's change on Monday with the governor may change things, but they do have takeout still, and they have outdoor dining. So you can go, especially in this weather, it's tremendous, noon to 8 at Fuel Barbecue. Check out fuelbbq.com. Also, and I patron this place all the time, Cafe Murano, they've been doing curbside. Okay? Now they can do 25% capacity starting Monday, but they also have outdoor dining. So check out Cafe Murano. Phenomenal Italian food. You can place your order ahead of time. Just check out the menu, which I'm not sure is going to change, but the menu has been different for the curbside. It's cafemurano.com. You can call them 407-834-5880, 407-834-5880. I wouldn't be talking about these places if I don't frequent them. Love Fuel Barbecue, Cafe Murano. They're killer. Okay. So, we have a question. Maurice asked a question about the types of orders you put in the market for stocks or ETFs. So let's go. Let me find the right spot. Bear with me here. Okay, we're going to talk about some orders. Okay, let's expand this a little bit. Okay, so let's bring it back a little bit. Hold on, bear with me. Okay. There are many different types of orders. That was a great question, Maurice, and he was from actually Winter Spring, so thank you for asking that question. So what I did is, since I had this question a day in advance, I worked this up for you so you can actually view it so it's easier to explain. There's obviously buy orders and sell orders. Now, in both cases, if you put a market order in, you're buying it at the next available price, pretty much. There's a bid and there's an ask. I'm not going to get into that. Market order is put an order in, you'll get executed immediately. Okay? Assuming it trades a decent amount. So on a buy order, if a stock is running all over the place and you want to make sure you don't want to pay more than a certain price, you would put in a limit order. Right here with a cursor. So, give you an example. We have a stock that's trading between 35 and 36. I go, you know what? I like the stock, but I don't want to pay more than 35 and a half. So you put in buy limit 35 and a half. What that means is you will not pay more than 35 and a half. Okay, you can pay less, but not more. Okay, so and we use limit orders quite a bit. It's common practice for us. Because we usually do a lot of block orders. So we're buying, if we're taking a position like the energy trade, I'm buying tons, 50, 20, 50, 100,000 shares at a time. I'm trying to get a good price, and then all my clients get an average. Okay. So the next potential order you would use is a buy stop. I don't use this. I don't use a buy stop, and I don't use a buy limit stop. But let me explain to you what that is. Think about this. You have a stock that's trading at 35, and the breakout. So let me explain to you what that means. Stock hits, we talked about support and resistance in the past, and I'll get more into it as time goes on. But you have a stock that can't get above. It just cannot get above 35. 35 is resistance. Every time it gets 35, it gets knocked down. That's a resistance. So as a technical trader, if you're looking at charts, you say, you know what? I want to make sure that the stock breaks out of that range because I want to trade it for a short period of time or whatever. So what you would do is say, okay, the breakout level is 35. I want to put a buy stop in, a buy stop at 35 and a quarter, meaning I don't want to own that stock unless it hits 35 and a quarter. That means it broke out. So at 35 and a quarter, the buy stop turns into market, so it could be anything over 35 and a quarter. The buy limit stop or buy stop limit would be 35 and a quarter exactly. It would not be any higher than that. That's all that is. That's the only differences. Yes, it's confusing because, well, who would want to buy? Why wouldn't you want to buy it now? You'd rather wait a quarter or a point or whatever to buy it. That's because it's a technical trade. And when you're looking at charts, the charts are telling you, hey, the breakout is here, and that's typically for short-term trading. Now, all of these trades, you can, most cases, do a day order. Meaning, if you put a limit order in, there's a stock trading at 35, I want to buy it at 34 and a half. If it drops, I'll take it. You can put it for the day. At the end of the day, 4 o'clock, if you didn't get executed, it expires. However, you can also change those. Now, we use TD Ameritrade and Schwab, and we can put good till canceled orders, which means I'm willing to buy XYZ stock at 35, and it's trading 38, let's say. Hey, if it ever hits 35, I'll buy it. I'm going to put the order in now, make sure I have the money in my account, and it's good for the next 6 months. You could do that. I don't recommend it. Why? Because you'll forget. And you may spend the money on something else, buy something else, all of a sudden you get executed, say, shit, I need to come up with money. So, those are the buy orders. On the sell side, it's similar. So, it's a market order is a market order, meaning you're going to sell something and the stock's trading at 35, I want out, boom, it's a market order, the next trade you're going to get done. You want to stop. A stop is a protective tool. You own the stock at 35. You're saying, I really don't want the stock to go lower than 33. I want to protect myself at 33. You enter that stop order. I want to sell 33 stop. What that means is when the stock hits 33, it turns into a market order and you'll get out somewhere around 33, if not 33. A stop limit is very similar, except same scenario. You own the stock at 35. You put a 33 stop limit. That means when the stock hits 33, you need to get out. You're not taking less than 33. On a stop, it's a market order, so you could get 32.99, 32.98, but on a stop limit, it's no less than 33. Okay? Now, there are other two stops that can be used. Again, these are not things I use, not for any reason other than I'm watching my investments for clients and myself all day long, so I see where they are. I'd rather not have orders out there that I'm not in control of. Trailing stop would mean it's a nice tool if you work all day long and you can't pay attention. You buy a stock at 40 and you say, you know what, I don't want to lose more than 10%. So you put your trailing stop at 10%. So what does that mean at 40? Well, at 36, you get an executed sell order. So if it goes to 44, that moves up also 10%. So if it goes up another 10%, it moves up 10%. So that 10% always moves up. And the point of it is that at some point the stock's going to go up and it's going to move in concert 10%. But then your stock's going to go down. What happens to your trailing stop percentage-wise? It doesn't go down at that point. It's going to stay no more than 10% away, but if the stock's going down, it's there to protect you against yourself. Okay? So that is a trailing stop percentage-wise. And trailing stop, it works the same way. You could do it dollars. You could say, I don't want to lose more than $5,000 in this trade. And you can do the same thing. Okay, so I hope everybody got that. If you have any questions regarding stop orders, please get back to me and we'll go over it and all different kind of orders. Look, I also want to bring up, before we go into bonds, I had a question about bonds. Ron, what a good guy, man. I really like Ron. Ron, thanks for, I'm trying to find the chart though, Ron. I'm looking. Oh, okay. I talk about the FANG stocks, and it's really kind of like FONG. Facebook, Amazon, Apple, Netflix, and Google. So Facebook reported tonight, did great. Amazon, Apple report tomorrow after the close. We'll see. I told you Amazon's got an 80% chance of beating estimates. Apple, 29% chance. Meanwhile, Apple's up huge today. Netflix reported, beat estimates. Google had a nice earnings report. Stock was up today. This morning they reported. But take a look at these stocks. These stocks represent, literally, they represent almost 80% of the market. But what do they all have in common? What's their common theme? Facebook. You're sitting around all day doing nothing, looking on your Facebook. Amazon. You're sitting around all day saying, what can I order off my cell phone? Apple. What can I order on my Apple cell phone? Netflix. Gee, let's watch Outer Banks. Let's watch whatever. I don't know, this stupid ass shows. What's that show, Nikki? Too Hot to Handle or whatever, that stupid thing that Courtney told me to. She didn't tell me, but when I have insomnia, which I do, and I did this morning, I watch stupid shit on Netflix. Yeah, bad stuff. Anyway, it was some kind of hot, stupid show, and I'm not a believer in The Bachelor or Bachelorette. I hate those shows. And then, of course, Google. What do you sit there? You search. You're reading ads. The FANG stocks have basically just ran the stock market. I believe that we will see. I don't think Apple's report is going to be as bad. And let's just take a look at a couple charts before we move on to Ron's question. Because Ron, hold on, come on. All right. Apple, up $9 today. Okay, it's up $9 today. Now, what I want to show you, close at 287.73. Here's the after hours trading. So it closed at 287. It's trading at 291 after hours. They report tomorrow. I would rather it be trading down prior because I'm a little concerned. All right, but I'm an Apple holder. I own a ton. But anyway, trading up after hours. But that's because all of the FANG stocks. Let's take a look at Facebook, which reported earnings. Facebook was up $11 today at 194, and I'll just, instead of after hours, the bid in the ass is 212 after hours. So let's see, it's trading 212.03, 212.14. So it's up another $16 after hours. Unbelievable. Let's look at, and by the way, I don't call Google Alphabet. All right, it's refused to. Google, look at this, up almost 9%, $109, and it's only up about $3 after hours. Okay, let's look at the trading after hours. Very interesting, though. By the way, I don't like to trade after hours. It's trading up $6 after hours. I don't like trading after hours. You know why? Because it's a very thin market. There's not a lot of liquidity there. So, to me, and I can't tell you how many times a stock's up after hours, and when analysts get to hear the conference call, they say, not really crazy about it, and it gets dumped out in the morning. So let's talk about Amazon. Had a pretty good day today, up 2.5%, up $58 at $23.72. It's trading at $24.15 after hours, so it's up another, call it $43. All right. So those are all doing really well. They're extended. I mean, Amazon's extended, and I believe that these stocks will pull back. I mean, it's struggling up here. Can't get above that new high. Yes, earnings are great, but I do believe that they'll pull back. When you look at the chart on Apple chart actually looks pretty good. Come on. There we go. The Apple chart actually looks pretty good. It had the sell-off, and it's trying to break out, but we'll see what happens here on the breakout. That could be a little bit of a problem. Netflix. Again, these are the best charts on the market. They ran the market. Okay? I didn't buy Netflix. I owned it in the past. I've owned it, bought it, and sold it. I don't own Facebook now because I got concerns about owning those stocks. So, all right. Let's go. Last question of the night. We're going to wrap things up because we are gone. We're 31 minutes in. So, Ron wants to know about the bond market. So, let's talk about the bond market first of all. What a bond is you are loaning a government, a municipality, a company, lending money in a mortgage. Those are bonds. You're lending money. So what you're doing is you're lending somebody money, and they say, okay, and based on what you believe is their chance of them paying you back the interest and principal at the end of the term, because if you buy individual bonds, they have a finite term. A 5-year bond, okay, I'm buying a IBM 5-year bond. So I'm loaning IBM money for 5 years. It can go up and down during that 5 years, but at the end of the 5 years, I have to believe that they're going to be able to pay me back. So, government bonds, I wouldn't touch one with a 10-foot pole. And they are backed by the full faith and credit of the United States government, but here's why. A, you're not getting paid enough to tie your money up. The 10-year Treasury is somewhere around 65 basis points. So what does that mean? Well, for every $1,000, you're getting $6.50 in interest. $6.50. Think about it. 10% would be $100. 5% is $50. We are at 0.65%. So to tie up $1,000 for 10 years, you would get $6.50 per year in interest. Not enough for me. So I would not be buying government bonds. I think they are going to be right now. They're doing well because there's an inverse effect. When rates are low, that means bond prices are high. Rates low, bond prices high. If the rate on a 10-year Treasury jumps 1%, meaning from 0.65 to 1.65, where it was just last year, so that can happen in a heartbeat, you will lose 10% on that bond. On paper, if you hold it for the 10 years, we do believe that the government will pay you back. In the meantime, if rates keep going up, here's why. Why would somebody buy, if I'm going to go give the government, here's my money for 10 years, you're going to pay me 65 basis points, right? Okay, great. Then 3 months from now, rates are 1.5. Why would I buy your bond for 65 basis points when I can buy the new government issue for 1.5%? You have to sell it to me at a discount to take that 65. So that's how bonds work. Anyway, folks, we have the shredding day coming up. All right, that's going to be on Saturday, May 30th from 12 to 3 in my office parking lot. Bring boxes. Everybody's invited. I got 3 hours. Bring your boxes, your taxes, anything you just want to get rid of and shred. Safe. You can watch them shred it. I'll have cocktails. We'll have sandwiches, all kinds of stuff. It's going to be Saturday afternoon. We have a podcast now, The Stock Doctor's Prescription. It is on Apple now. So Apple Podcast, Spotify, and a bunch of others. The Stock Doctor's Prescription. Search for that. You'll find our podcast. We've got 2 episodes. We'll be putting the 3rd episode up on Friday. And as always, I really appreciate you guys joining me tonight. Thanks for the questions. And we do get them throughout the week. There was so much to talk about. but I don't want to drag this on. All right, it's been 35 minutes. I really appreciate you guys spending your Wednesday evening with me. I know, it's a big choice between watching me and watch Jeopardy. I get it. I hope I'm a little bit more entertaining than Jeopardy, although I'm a big Alex Trebek fan. Anyway, I'm Lee Seiler, also known as the Stock Doctor. I really appreciate you guys joining us. Share this video, all right? And please feel free to call us. See the number down here. If you want to talk about investments in your own portfolio, we certainly are there to help you as well. Again, have a fantastic evening. We'll catch you on our podcast on Friday. Thanks.